I think if you speak to a retailer today, then he will tell you that he is absolutely fed up about hearing about multi-channel, omni-channel, and whatever, that all is retail, and that it's all about the customer satisfaction. So I think it's all coming somehow together, and that's how we are going forward.
Christopher?
I fully agree. I don't think, as I said in the beginning, e-commerce is 5%, and then we talk about e-fulfillment, which makes the market a bit bigger. But at the end, it's getting goods from A to B, and we see the greatest change in this last mile distribution. I think there's a lot of infrastructure to be put in place, but in terms of generic sheds, I think they remain generic because that's what the investors want. And as Joseph was saying, if you build something very special, it might be a bad investment. So I do not think it's becoming a niche. What I do think is that it's changing customer expectations. So you can see, you get your parcels same day, and suddenly the B2B customer wants to have the same. So I think e-commerce changes a lot of the expectations, not only for the end users, but for the entire value chain there.
Yeah, and I think the big beneficiaries of not having e-commerce buildings being as a separate asset class are the e-commerce companies themselves, actually, because that would mean that their asset is not a special one, or is not something that should be considered differently, which means that their rents and their values are blended in with the overall market rather than being looked at separately, which would mean lower value, high rents.
This isn't going to be a niche sort of subsector of the market. I think the type of capital chasing logistics is looking at it for the wider benefits. I think I mentioned before the longer income type opportunities that you can get from e-commerce buildings, whether it's new buildings built, the e-fulfillment centres or the parcel hubs, or longer leases taken on existing buildings, is attracting core types of capital to the sector, where there is a difficulty at the moment to get access to long income types of deals. So that's at one end of the market. And I think I come back to the point on the cross-dock types of buildings. We're seeing more money coming in for those types of buildings, and more funds grow with greater exposure to those types of buildings in those funds.
Just one comment, but it's very difficult to get the investments going in terms of cross-docks. I mean, you have to buy hundreds of them they're costing somewhere between 5 and 15 million. So it's really hard to get that going. So it's a portfolio task, or you have to be collecting really small assets.
I think the big advantage in these parcel hubs, especially when you are close to the city for the city distribution, is that then your customer base become all the clients you're serving. So you have a much better security on your location than typical logistic when you have one tenant with a lease break, and that can free up a big a big warehouse. In parcel, it's much more difficult for the company to move.
We have in our portfolio a number of cross-docking buildings, and it's good to have a few of them, not as a substantial part of your total portfolio, but in the mix. I think it's a good combination with if you look at the total supply chain, to have your different positions in that supply chain covered in your portfolio.
And how do you weigh the sort of different risk returns that you might have with the sort of e-commerce building, or as opposed to more traditional logistics, if we can talk about that?
I don't think we distinguish very much between the two. It's really depending on location. If you're really close to the big population, you would probably project the same numbers on the cross-docking as on the big boxes. We have a number of portfolio acquisitions where they were part of the big mix. So you blend it all together, and then you end up in a good place.